You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors, Mark Longo, Dan Passarelli, and Jill Malandrino.
All right, everybody. That slightly ominous music, I love it. Means it's time once again for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Radio Network. And, of course, if you're wondering, hey, what is this show I just tuned into? Well, this is the program that's going to take you from the basic retail stock trader. Maybe you're thinking about dipping those toes in the old options waters. Maybe you've already started, but you're not really sure the best way to proceed. Well, sit back, relax, have a beverage or two. We've got you covered for the next hour or so here on Options Bootcamp. And, of course, you can enjoy this program many fine ways. You probably are listening to it via iTunes maybe, or maybe via our website. A lot of times you can also get it live via the old Mixlr's, MIXLR. So look for that if you follow us over there on Mixlr as well, or via social media. And, of course, however you listen live after the fact, maybe you listen via our app or the website, however you listen to the program, make sure you hit us up, questions, comments, insights. I know a lot of you guys do. We probably need to have just one dedicated Q&A episode a month for the volume of questions we get for this show. But we try to fit as many as we can into every episode, so keep those questions coming. We don't answer them live on the show, then we'll be sure to get back to you in some other way, social media or email, however you write to us, with some sort of answer to your question. So don't worry. Keep those questions coming. We do, yes, we do, like to hear from you guys. And joining me on the old program today, my usual cohort, my partner in crime, the black hat to my white hat, Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of many seminal options tomes, including Trading Options Greeks. Mr. P, welcome back to the program, sir.
Mark, good to be back as always. Looking forward to some fun and stimulating conversation.
And this is usually where I introduce my other cohort, Miss Jill from NASDAQ. Fortunately, she's traveling hither, and I actually crossed paths with her a week ago down in Florida at a different conference. She's always at conferences. I was at the Inside ETFs conference, and she was as well, but for whatever reason, we didn't get a chance to chat. It was a busy event, but so she's always off at conferences, so she won't be able to join us today. But we have an able stand-in in the form of Mr. Dave Russell. He is the Vice President of Content Strategy over there at TradeStation. Dave, welcome to the Options Bootcamp program.
Thank you very much, Mark. How are you guys doing?
We're doing good. We're ready to talk some options. But before we do that, let's really quickly, as we are wont to do with all of our first-timers here on the old network, why don't you go ahead and give our audience a little bit of an overview of your background and what the heck it is you do over there at TradeStation.
Okay, great. Thank you. All right. Well, I have been involved in options trading for almost a decade now. I have historically kind of started as a journalist, but always on the financial side. I've been doing that since the late 1990s, covering emerging markets, and then I covered pretty much every kind of financial news when I was at Bloomberg for a good chunk of my career, and worked a little bit in television as well. Worked at the old Option Monster, And now I'm over here at TradeStation, so a lot of the stuff I work on now is really just looking for some of the broad trends in markets that people can see happening over time, that we can kind of trade over time. I'm looking for things that happen on a recurring basis, things like sectors, broader rotation. I'm really looking on trends. And the thing that I always look for is I look for big, broad trends, like, for example, a certain sector is strong or a certain kind of commodity. And that way we can drill down and find individual underliers that might give us all kinds of different options trades. So I'm pretty much looking at the big stuff, but always trying to bring it down to how can we trade things with options.
Well, I'm glad to hear it. You're on the right show then, Dave. And also, you guys provided a little bit of inspiration for a pretty fun, something a little bit different for our basic training segment. So without further ado, let's get to it.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in. Prepare to learn. Yes, sir.
All right, everybody, welcome to the basic training. You know, that music even more appropriate than normal, given today's subject matter. You know, we're kicking around topics, what we could discuss on the program today. Things we haven't maybe touched on before, and one came to us courtesy of Dave, actually, and his team over there at TradeStation. We were kind of discussing some of the initiatives that they have going over there. And once I heard it, it made total sense to me, because this is something anecdotally we've been coming to on our own here at the Options Insider for some time. So today we're going to focus for our basic training on a little bit different, maybe a little undersung, unheralded audience in the options space, and that is veterans. They are very much a growing community out there in terms of avid consumers of financial information, and so it seems appropriate to devote a segment of the show to them, what their interests are, what they're doing in the option space, and maybe some things they can or should be doing out there. But let's start, David, because you guys really kind of inspired this segment. Tell us why are veterans so important to you guys over there at TradeStation? How did you guys come about to start this veterans initiative?
Okay, well, my colleague and boss here, Travis McGee, like myself, is a veteran of the Marine Corps. He saw it as a way to really, first and foremost, to say thank you to these people who really risk everything for the country. And first and foremost, we just thought veterans, under our TradeStation Salutes program, we offer all kinds of good advantages to veterans. So we did this as a way to, first, as I said, kind of say thanks. But then at the same time, we find these are excellent customers. These are people who have spent many years in large sort of organizations. They're disciplined, goal-oriented, and they also have to deal with overcoming emotion. Now, I can tell you, I was at Parris Island back, I think it was 2001, and that was a time when the main thing that really happens when you're in Marine Corps Bootcamp is you're learning to overcome your emotions. You're learning how do you actually manage to keep your mind straight when there are shells going off around you, when there's people even dying around you. Can you actually put your rifle back together? Are you going to be able to fix your magazine when it gets jammed? These are basic sorts of things that sound really simple, but then when it comes down to it, emotion is a huge issue. As we know in trading, well, in many ways, so much of what the military is designed to overcome emotion. It's why it has rank structure, so you always know what to do. There's always a clear order of how to do things, and that's an excellent sort of mindset for people who then can become traders. So what we've done here is we've started this TradeStation Salutes program, and that basically means that if they are active duty military, veterans, and then also we've extended this to firefighters, EMTs, police, all the sort of people who would be considered first responders. Anyone in that group is eligible for the TradeStation Salutes program. That means they are going to get commission-free trading on stocks, ETFs, and options. If they trade futures, it's only 45 cents a contract. But the key thing is that for options, it's free in terms of commissions. I think that's tremendous because it allows people to start, learning from a relatively low basis. I mean, you might be able to trade, lower dollar value options, for example, and not have to worry about the commissions eating it up. Now, on top of that, we have partnerships with some major education providers like Online Trading Academy and Rule One. These guys are giving huge benefits to military who basically sign up for our TradeStation Salutes program. In some cases, a person might actually fund an account with $500 and get over $20,000 of free education just for signing up to the TradeStation Salutes program. The other cool thing about it is like I said, Travis is a Marine Corps veteran. I'm a Marine Corps veteran, but we're not the only ones. Many of the actual trainers themselves are veterans of the different branches. Not all Marine Corps, but hey. We got some Air Force guys and stuff in there. But the key thing is this is a program that was created for veterans, and it's by veterans as well. So there's a lot of, a real community here of people who kind of understand each other.
Now, I want to reiterate that again, because when you first mentioned that to me, I didn't think I heard you correctly. So you mentioned here all these veterans, and indeed now you've expanded it to first responders. This isn't some, free trades for 30 days kind of thing. You're talking free commissions, stocks, and options pretty much for life, correct?
That's right.
And that's a pretty ridiculous deal, So yeah, all these people who are writing to us all the time, lamenting about trading costs, and they can get substantial, even at some of the cheaper brokerage houses when it comes to options in particular, multi-legs and ticket charges and all that fun stuff. So you're free trading for life. That's an impressive offer. Did it take some time for you guys to get the TradeStation brass to come around to that, or were they kind of on board from the beginning?
Well, I don't know. I think when Travis has his mind set on something, he knows how to make it happen. So, it was something that I think they see the value of, and I'm very happy to do it and to, extend the program as well.
It's interesting because, the veterans, people might be saying, well, why are you talking about veterans here on the show? And because, that program is certainly very interested. So if you fall into that category, you should at the very least reach out to Dave and Travis at the team and see what they have going on, kick the tires over there for yourselves. But also, B, it's interesting to us. We've seen this has been a growing audience for us as well. We've done some partnerships with the Armed Forces Radio Network. We're hoping to looking to expand that in 2018. We've seen just from doing those initial forays just what an interesting audience this is. I think a lot of people out there have these misperceptions, about veterans coming out, that maybe they aren't interested in the financial space, or a lot of them people think they have a misperception that veterans don't have the money to kind of put towards this. And what we found kind of interacting with them, and I'd be curious to get your guys' perceptions on this as well, has kind of been exactly the opposite. A lot of these guys come out of the service, and people have this misperception they don't have the cash, but a lot of them actually, and some of these guys themselves, they have a little bit of they're very gung ho. They want to they seem like they want to make up for lost time, which is interesting because a lot of them actually have done fairly well in the military, particularly when you think of a lot of them don't have the traditional costs a lot of people have in terms of housing costs and everything like that. So that actually allows them to put away some capital that other people probably their age may not have been able to do. So we found this audience to be pretty, ready and willing and gung-ho, pun intended, to really dive in and get some education. I'm curious, Dan, you've interacted with a lot of different clientele over the years at Market Taker Mentoring. A, do you have a lot of veteran-oriented clients? And then B, if so, what are some of your thoughts from engaging with that audience?
Yeah, we don't have such a really awesome program like that to specifically do something great for our veterans, unfortunately. But we do have some. I wonder what the percentage of our students are versus the general population. Probably a little bit of a higher percentage of veterans and that kind of thing. And, a lot of them do real well, and I think maybe it's the disciplined approach and maybe a lot of the other things we've been talking about here. But, it's great. It sounds like a really awesome program. And, I've known Travis for years. When that man sets his mind to something, he does get it done.
Must be the old Marine Corps in him. But yeah, it's interesting. This is an audience. In fact, I've engaged with a bunch of different, options trading clubs and educational groups out there and kind of just communities about options. And it seemed to be a lot of veterans in those. In fact, I was talking to some people from the Honolulu Options Trading Club not that long ago, which I wasn't even familiar with until some folks at the SIBO kind of introduced me to them. Apparently, they're the largest one in the country, which who knew? Honolulu was such a bastion of options. And they were telling me the vast majority of their membership is actually former active duty and retired military, because there is such a big military presence in Hawaii. So we're seeing this starting to penetrate in a lot of different areas. I'm curious, Dave, you guys are interacting with this audience on a daily basis. You know, what are you seeing in kind of general 10,000-foot trends from this audience? You know, what are they doing? What do they like to do? Are they very hungry for information? And then also, obviously, very pertinent to us here on the program, are you seeing a strong hunger in them to learn about options?
Well, they're definitely interested in learning. In terms of the trading, I can't get too much into what individual customers tend to do. They tend to be essentially coming in the same kind of mix you would see for any other kind of customers. Some people want to be directional. Other people are going to be, writing income. So in that respect, they're very much, they're very dedicated to what they're doing coming in and starting to do this stuff. But at the same time, they're, for the most part, similar to a lot of other, clients coming in. So we've seen them with a huge amount of uptake and, real appreciation of the things being offered.
Yeah, it's hard, obviously, to label any group with any particular strategies. Like I said, I've seen a lot of them coming in, and they have this feeling for whatever reason they want to make up for lost time, as they put it, a lot of them. And so they start to get into a lot more of the capital appreciation type strategies, like verticals and things like that. And then eventually, you're right, after time, if they get a little bit more sophisticated, like a lot of options traders do, they maybe add an income component to their trading, or they start constructing collars and things like that. So it seems like a pretty traditional path for a lot of veterans. I would say maybe in general, just from the engagements, again, pun intended, we've had with them a lot, does seem like, I would say a higher percentage of veterans do seem interested and or willing to explore about options versus your standard general investing populace. Maybe that gets back to what you were saying before, David, about just maybe some of that mindset of when you go into the military, maybe you have to be a little bit more, outgoing or risk-taking, call it what you will. They'd be more willing to seek out new experiences. As a result, they're a little less apprehensive when approaching new financial products, because it does seem like a higher percentage of veterans, I would just say in general, seem like they're embracing options versus your traditional retail stock trading crowd. Would you say maybe anecdotally that is kind of your perception as well, David?
That is very much the case. And one thing I would say about you being in the military is a few things. One of those things is that one of the things that surprised me going into the Marine Corps was that it's far more about understanding, getting the main skill I actually learned in the Marine Corps was tact and dealing with people. Because in some ways, when you're there with maybe your company or your battalion, you only have each other. And if you get on people's nerves the wrong way, things are not going to happen. Your men are not going to get fed. You're not going to get supplies. Things just don't happen. You have to learn to work together. Now, that might not sound like as much with options, but the thing is that you learn the sense of a group of people. You learn when people are tired and angry and they don't want to hear you, that you learn when there's times when they're going to help you or they don't. It's a constant interaction of one unit with another unit, one NCO with another NCO. Two NCOs, one wants to say, hey, can we do this guard duty versus that guard duty? If you don't have a good relationship with people and you don't understand where they are and that maybe they were just on patrol for the last 20 hours versus not, by learning that, you learn to recognize these groups and you learn to understand what people are thinking and feeling. Well, that's pretty applicable to the market. And you realize that there's a lot of things out there that for a while may or may not make sense. If a stock has made a huge move in one direction or another, you realize people are more willing maybe to take profits or to buy a pullback or something like that. And I think that's one of the key things is that the market, to me, I'm very much someone who studies sentiment. And I found that in the military, there were guys who were very good at getting along with these complex sort of things when sentiment does change, and it matters a lot, and you're not necessarily going to succeed in a big group of people doing stuff if you don't understand sentiment. And I think that's one of the kind of surprising things that for me has kind of stood out. I think another thing about the military is that people kind of learn is that at the end of the day, we're all human beings. You might see everyone has to sleep at night. Everyone has to eat. Anyone can get shot. And that, at the end of the day, means anyone can become a good trader too. Just because maybe you didn't go to college, or just because you have whatever background you have, just because you're not starting with a lot of money, doesn't mean that you cannot become a great trader. There are guys who went in the Marine Corps with all kinds of backgrounds, and they won medals of honor. And I think that's kind of the sort of thing that my point of view is that in the military, you actually learn you can be anything if you put your mind to it. One military, in one unit, if you prepare a defense correctly, you can defeat an attacker. Doesn't matter if they seem to be better than you. If you do your job right, you can win a given fight if you do things the right way. And I think that's one of the key things in trading is that we all are here with our capital, and if we wait for the right opportunities and we decide the kind of rules and the kind of situations when we're going to attack or we're going to actually act, we can succeed no matter who we are. And we can beat people who might have billions of dollars in capitals, who are at big institutions, who are just suddenly freaking out and puking out their holdings. We can make money from that as traders with much less capital if we're disciplined. And that's, I think, one of the interesting things that I learned in the military.
Yeah, it is funny, interesting anecdotally, just talking to people in the option space, as we are wont to do here, part of our jobs here on the old network. It does seem like the options world is kind of collectively awakening to this audience, and has been over the last year or so. We've seen other audiences slowly get embraced. RIAs and asset managers were a big push a few years ago, still are, of course. But I think they're collectively starting to realize the value and the interest coming from this audience. Like I said, a lot of these misperceptions people have labeled on veterans for a long time. Maybe they thought they weren't interested, or they thought they didn't have the income. A lot of those have obviously been proven not true. They're a little bit older, a little bit more experienced audience, which is always, I think, nice for a lot of the financial institutions out there. And also they have more income than you probably would assume, which is good they can obviously establish trading accounts. And when they start trading, they actually tend to trade fairly actively, which again is what brokerage firms want. They want clients who are active and engaged with the content, with the company, and with the product. And of course, the exchange want people out there who are trading actively. So it does seem like collectively the options world is somewhat awakening to the potential for this new audience, which is, in this day and age where people are lamenting where is the options growth coming from. I was at the big options industry conference just 6 months ago, or a little more than that, in May of last year, and people were kind of wringing their hands saying retail was kind of done, the options market had plateaued, where was the growth going to come from? And lo and behold, we have this quote-unquote new audience that potentially could be an interesting source of growth going forward. So I'm very interested, and I'm very happy to hear that you guys at TradeStation are taking up this mantle. I wouldn't be surprised to see some other brokers hearing about this and maybe deciding they want to get in on this veterans train as well, because A, it makes sense, B, it's a great way to give back, and C, it's just a great audience to have for your brokerage firm. I know, Dan, any thoughts, any takeaways here before we move on? Some veterans, maybe thoughts, maybe things that you've experienced anecdotally interacting with this audience out there, and maybe some of the interesting things you've seen as a result.
No, I mean, just kind of highlighting on the stuff that we talked about. Yeah, I mean, absolutely. I mean, honestly, first and foremost, just the giving back part of it is great, But then also, I mean, as a business too, I mean, why wouldn't you focus on an audience that's comprised of smart people who are capitalized, who probably are predisposed to have a mindset that's going to help them succeed? I mean, why wouldn't you? Especially if you're a brokerage firm. I mean, customers who make money are your best customers because they keep trading and paying you commissions, So, yeah, I just think it's fantastic.
And Dave, if our listeners right now, before we even get into some of the other parts I want to do, I'll make sure we want to hit on this now. If they're interested in taking advantage of this program, where should they go? What should they do? Can they just go to TradeStation.com and click on a button, or is it a more involved process to become part of the veterans program there?
There is a website we have called TradeStation Salutes. If you just Google that, I'm not sure if there's a direct link to it on our site, but if you look for, actually it is. There is on our homepage a link to TradeStation Salutes. That's the program, TradeStation Salutes.
There you go. Head on over there. I just Googled it myself, listeners. It's pretty quick. Click on through to it. You're right. There isn't a direct link in terms of, but if you click through a few, you can find it. Just Google it. Easiest way to find it there. And then you too can become a part of this, and then you could save a lot of money while you're doing exactly what we're talking about here on the old program, which is trading up those options. Speaking of which, like I mentioned at the top of the show, you guys are always hitting us up with questions. Let's see how many we can fit into the rest of the show with some of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, buddy, welcome to the mail call. Like the man said, this is the portion of the show where you guys take the reins, hit us up with questions, comments, insights. You guys like to do that. Have been doing quite a bit. I'm looking here, Dan. The first question is directly for Jill. What the heck? What are we, chopped liver here, Dan? What's the deal with that? I feel left out. We're getting no love here. Well, of course, this is the episode Jill's not on, so you'll have to wait there for the answer to your question, listener. So I'm sorry. I feel very bad for you that you didn't send a question for Dan and myself as well. Really quickly, before we get into some of their questions, we have so many. We like to ask questions ourselves here, so I thought I'd ask you two here on the panel to join me as well. We ask questions every week. This week, it's earnings season. It's a big, hot time. Everyone likes to trade, particularly this week. A lot of big tech names reporting. So we thought we'd ask our audience, which of the big tech names that you guys are really looking to sling some options on this week? Gave them 4 choices: Amazon, Microsoft, good old Alphabet, a.k.a. Google, and Facebook. Dave, you're our guest. I'll give you pride of place. What would your guess be? And then B, more importantly, what do you think our audience is voting for? Which of these names is really resonating with them?
Oh, man, I think it's got to be Apple.
I said Apple's not on there. I'll give you a write-in for Apple. How about that?
I'm sorry.
Amazon and Alphabet. We had the other 2 A's of the FANG, but no Apple. I'll give you a write-in for Apple. So, Dan, we got 1 write-in for Apple. What are you feeling? And more importantly, what do you think is our audience feeling?
I mean, for me personally, I've traded Amazon, and I mean, I'd like to suggest a write-in candidate too of NVIDIA. But I guess if I'm picking from those 4, I'm going with Amazon, and I'm thinking that everybody thinks exactly like me. You can
always tell a genius, right? He thinks exactly like you. Isn't that the old definition of genius? Isn't that the first line on the Mensa application? How do you define a genius? He thinks exactly like me. Yes, you're right. 38% choosing Amazon, 29% Microsoft coming in a decent number 2, 19% for Alphabet, 14% for Facebook. So no love for the old FB. You got a couple days left there to vote over there. All right, let's get to more of your questions here. Here's an interesting, maybe circuitous question. Comes from B. Fowl. He or she wants to know, what is the most common options question that you guys get? I can name a bunch. It's actually kind of evolved a little bit. When we first started doing this for a long time, the question pretty much was, hey, I bought an out-of-the-money call, and then the underlying moved in my favor, and either the call didn't make as much money as it should have, or I thought it should have, or I lost money on the call. How is that possible? And it was always inevitably a question about volatility and skew and things like that. And that was kind of the number 1 question. Then it kind of morphed a few years after that. We've been doing this for 11 years now. A lot of people had questions when VIX started getting hot about how come VIX moved up 2 points, and I didn't. My product I was trading didn't do that. They didn't realize it was pretty much a backwards way of asking why what am I trading with VIX? Why come I can't trade the cash? We have to, so of course, explaining about the futures and how those work versus the cash is not really a tradable product. We've seen attempts to do that, but not so much. And I would say in the last 6 months, by far the number 1 question we get these days, you guys can probably guess what I'm going to say, is when the heck are we going to get Bitcoin options or some variation therein? Do we have Bitcoin options? Where can I trade Bitcoin options? So it has morphed quite a bit over time. These days, definitely skewing heavily towards the the Bitcoin. Take that for what it's worth. Dan, you obviously been doing this for a long time. What would you say is the most common options question, or is it, like I said, is it maybe evolved for you over the years?
There's the old, where the hell did my money go? Fashioned questions. You get a lot of variations of that same question. People are always, people are always asking. The most common questions come from more basic traders, typically because, well, there's more basic traders and there are advanced traders. It's sort of like a pyramid, or funnel, if you will. And, a lot of them are things like, well, what's the best strategy to use? Which, we've talked about this a gazillion times on this show. There's not a single best strategy. There's a best strategy for each situation. I don't know. Where's Apple going? I don't know the answer to this. You don't know the answer to this. Nobody knows the answer to this. So, I don't know. I guess as people get a little bit more sophisticated with their option trading, I guess the fashion of their questions change. I don't know. I guess I got a little philosophical there for a second. Sorry.
Look at you waxing philosophical on us here. That's what I get for winding you up and letting you go, because you never know where the black-hatted one is going to wander off. Dave, same question for you. You guys engage with your audience, obviously, on a daily basis. What is probably the most common options question you guys get over there at TradeStation these days? And don't say Bitcoin. I already said that.
It's usually about choosing the right one. The problem with options, if this is a problem, is sometimes there's too many options, so to speak. Now, there's too many, but the thing is that people go to some of these products and they're going to find, especially for things like SPY, there are so many expirations and so many strikes. That to me is, off the bat, the main thing that people get lost with. They want to, take a position on an underlier, and then they end up getting buried in an options chain. How to pick the right strike, how to pick the right expiration.
Options chains can be perilous things to navigate. It is sometimes you can get lost in the woods there on those options chains. Let's see what else we've got. P James Lamar. Actually, this is a good time for you to be on the show here, Dave. Maybe you can win yourself a client depending on how you answer this next question. I'm not going to put you on the spot or anything. P. James Lamar wants to know, can you guys recommend an options platform for an active options trader? I'll try to add a link to what I used to be able to do on my old platform, but I'm no longer able to do. But I would like to find another platform that has single-click entry and exit for options. A few typos here. If you know one, please let me know. Thanks. He included a link to his video. I checked out his video when he first sent this question in, and apparently what he wants is actually fairly basic functionality. I won't say the brokerage platform he's switching away from, but apparently they don't offer that anymore. What he I think wants from his video is pretty basic functionality. He wants to be able to see an options chain and then be able to click on a bid. And by clicking on that bid, the platform automatically populates a sell ticket because he only wants to hit the bid, and vice versa. If he wants to click on an offer, it populates a buy ticket because he knows he wants to enter a buy order. Usually when you're clicking on the bid like that, on the offer. So here you go, Dave. Here's your chance to win over P. James Lamar to your platform. Does TradeStation offer that kind of functionality?
It's a really complicated answer. Yes.
Oh, there you go. See?
That's it. Absolutely. Now, there are functions in the Options Station Pro in TradeStation that they make that incredibly easy, and it's really mind-blowing. I'm familiar with some of these other things that might be out there as well, or maybe used to be out there, but those other approaches that other providers might have had, TradeStation does it in an amazing way. And the Option Station Pro basically allows you to do all those kinds of easy things. It allows you to exit positions or manage things very quickly. One of the nice things about it is it allows you to very quickly change how you view something. So, for example, I'm someone who tends to leg into directional positions. So I'll buy shares, the stock will run up, hopefully. If it does run up and I sell calls against it, I can very quickly, in terms of doing risk analysis, I can literally drag and drop the short calls on top of the long stock, and now suddenly it will do a risk analysis based on a covered call. Or I can just separate them back apart as two different positions again. I can do all that in terms of order management and all that stuff. It makes it insanely simple. You can do amazing things in this Option Station Pro. and you can also do very simple things very quickly. So I think that this is really one that's worth a look. And, of course, our mobile platform is something where it has been extremely popular for options trading. So both of those right now, I think, we're looking at a very strong offering for people like PJ.
Well, there you go, P. James. You got a platform you want to check out. I was actually kind of surprised to get this email because I kind of most platforms usually have that baked into their functionality. Now, on the one he sent a link to, I was kind of surprised they had taken it out for whatever reason. So yeah, this is something you'll find, I would think, on most platforms. And as Dave was alluding to, TradeStation kicking it up a notch with some other functionality to be able to drag and drop and do some other fun stuff. So there you go, Mr. PJ. Hopefully that answers your question. If you want to see in full depth, Dave, you can go click on his link and he'll explain it to you. Exactly the functionality that he's looking for, so you too can educate yourself. Let's see. There's so many in-depth, like 10,000 foot questions this week too, which is kind of interesting. Here's one from Charlie C. He has a quick question for the show, which is ironic because this is anything but a quick question. He says, what's the weirdest thing you've ever seen in the options market? Oh, I need to mull over that one for a bit. I went first on the other big 10,000 foot question, so I'm gonna make Mr. P go first on this one. Mr. Passarelli, on the spot, quick question: what is the weirdest thing you've ever seen in the options market?
I have seen a few. Let me tell you. One was a great one. Actually, it was a terrible one for me, to tell you the truth. But back when I was a market maker in the Ford Motor Company options on the floor of the CBOE, I owned a lot of options. I was pretty long Vega, and a big firm kept selling it and selling it and selling it. It was right before a spinoff of $20 worth of cash in Ford. Ford used to be a $46 company. Then they spun off $20 of cash, make it about a $26 company at the time. And it was really interesting. On the X date, the day the cash distribution happened, the implied volatility rose, and anybody who was long Vega lost money. How does that work? You're long Vega, volatility goes up, and you lose money. The answer to this question is probably about a whole show in itself, but that was a pretty interesting, real doozy of an education there for anybody trading Ford around that time.
Long Vega and you lost money. Interesting. I would like to hear the nuances of that someday myself, sir. But I guess, we don't have time. That'll be on our lengthy Why Did Dan Lose Money show that we'll do coming forward. Then we could get into that. I have a similar frame. I'm trying to think. There's so many weird things in the SPX, people getting picked off by weird kind of phantom puts. People obviously knew things ahead of time. I recall when I think Rick Rubin resigned, that news obviously broke before it hit the broad markets because someone was picking off the crowd buying puts out there. We saw that all the time out in the equities as well. People coming in at the end of the day, who clearly had some foreknowledge of what was going to happen in the after hours, just picking us off left and right on calls across the board. I think the one that resonates to me, I don't know if this really qualifies as weird, but it's kind of along the lines of what Dan was saying. I had a similar experience. It wasn't in Ford, it was in Intel. I just come from the SPX out into Intel, so I hadn't been trading equity options very long. I was mostly used to index options, which are a different beast if you've ever traded the two of them. And you don't have earnings events in an index like that. It's a little bit different. And it's just back in the dot-com boom. Everything was booming and booming and booming. And Intel was kind of leading the charge. They were one of the big ones up there with Microsoft as the name everyone kind of put forward as the head of the dot-com charge. And then all of a sudden, kind of out of nowhere, they pre-announced their earnings, which you usually know when they do that is usually never a good thing. And so the stock just got annihilated. I remember walking out from the floor that day and coming back to the office. And in that time between leaving the trading floor and getting back to my office, the stock was getting annihilated in the after hours. And then coming in the next morning, and it was such a big deal that Intel had done this that there was literally a crowd, because the rest of the floor was pretty quiet. So a lot of guys were coming from all over, other pits and other things, just a crowd, I don't know how many deep, just to watch us trade this crazy monstrosity that was Intel, that was opening up down, I don't know, 30-odd%, which in the dot-com days when everything went straight up, this was unheard of, let alone a blue chip tech name like this selling off. So it was crazy. It was terrifying. Brokers were lined up, as you might imagine, with orders across the board. It was also an interesting education for me in just literally seeing, how the volatility plays out through an event like this, how the extremity of the move played out, and how the stock continued to sell off. And once that sell-off finally abated, we had people coming in, brokers just lifting offers through the offer on any put they could get, any volatility they could get, kind of like Dan's story. And that was kind of interesting education for me to just see the desperations and the lengths and how nice it was. It was kind of a reinforcement for me to have, because I always kept my my downside kept the bullets in the chamber, as we used to like say on the floor, in case you needed to shoot them at those extreme moments. And I had some bullets to shoot that day, and it worked out pretty well. But it's just one of those stories where that was a literal education for me, and just how, because I was still pretty new at the market making at the time, I believe, and just how useful it is to keep your downside a little bit open, have a little bit of those bullets to have for those days, and how valuable they could be. And also once the frenzy passes, it passed pretty quickly. Once it seemed like the worst was over for Intel, how the vol just came crashing in again, just got annihilated. And levels that were trading an hour or two before in the morning from volatility perspective were just annihilated an hour or two later. And so just that was if it was a great crash course for me, and just how these kind of panics play out in a big name like that, and what you can do to trade around them. A little bit of the same story, a little bit different story than Dan. I don't know if that qualifies as weird, but for me, it was certainly strange at the time. I'd never experienced it before, and B, it's certainly imprinted on me as a young market maker to how to navigate and deal with these sort of things. Certainly not an experience I will forget anytime soon. That was a lot of preamble for you, Dave, to buy some time for your answer. So what do you have to say here for our friend, for Charlie C, and his quick question, which is anything but?
All right. Well, the weirdest thing to me is, I used to basically analyze all the options trades in the market and write about them all the time. And we would see all kinds of unusual strategies of, sometimes they'd make sense, sometimes they wouldn't. The thing to me that was always just strange was we'd see people sell very large positions in puts for 1 or 2 cents, and we could tell they were being sold. Never made much sense to me why someone would take that much risk. And sometimes they didn't work out very well. We saw that at certain times when the market was just drifting higher in big sort of names. So that was one thing. I think one of the other things is not exactly the options market, but it's something that is in financial markets, and it definitely causes a spike in volatility at the time. But it was way back in the beginning of 2007. There was a crazy squeeze in the Japanese yen. And that's one of the things that I have found is it's kind of interesting. In the market crash, if you look back to February of 2007, before the bigger sell-off happened with the financial crisis. But I've actually learned that sometimes when you watch things like the correlations in the yen and stuff, I've actually found that that's one of the good ways to anticipate volatility in the broader market. And I think one of the reasons why we haven't seen as much volatility in the last couple of years is a lot of these correlations have broken down. So for me, I think that's one of the things now I look at that's interesting is that for me, it must make it very hard to be kind of hedging positions and stuff, because right now it's very weird how little correlation there are between a lot of different assets. And so that's something that strikes me right now.
Just looking ahead at our question list, you got so many. And some of these questions are very, very, very broad and open-ended here today, Dan. Our listeners, they want big, sweeping questions, I guess, this week. Here's another one. They kind of think it's quick, but it's not. We can probably talk about this the rest of the show and many shows. LTV Money. He or she wants to know, what is the cheapest way to buy an option? Well, man, we could hold court on this for days. I think you ask 10 different options professionals, will have 10 different answers to this question. There's a lot of different ways you can go. Obviously, outright's not going to be the answer, because that's going to be the net outright. So it's going to be some sort of spread, and probably in some sort of ratio. So, 1/2, 1/3, something like that. Because the more you do the ratio, obviously, if you're just talking about net premium outlay, that's probably one of the cheapest ways to go. The problem with that, as we've many times on this show is that the more crazy you get with the ratios, 1/4, 1/5, whatever, the more risk you're taking on there. So you didn't say what's the lowest risk way to do it. You just said cheapest. Net cheapest. Yeah, if you go crazy with a ratio, you can turn any trade into a credit eventually. I'm not sure if your broker will smile upon that, or if your margin account will smile upon that in terms of how much margin you have to put aside to cover your naked risk. But probably net premium, that's probably the way to go. And Mr. P, when someone comes to you and they ask you this question, which I'm sure you've been asked many times. First off, aside from counseling them not to ask this question, because it is kind of missing the point a little bit. But what do you say to people when they come up to you and ask you this question?
Yeah, I mean, what I say is you're asking the wrong question. Because at the heart of the answer to the question is it's like saying, well, how do I buy the cheapest car? Well, I mean, you go to the junkyard and probably buy a car that doesn't have an engine or tires for, $200. Okay, there you go. There's the cheapest way you can buy a car. But I mean, if you could buy a BMW, a brand new BMW for $20,000 with leather interior and everything, I mean, is that a good deal? Yeah, that's a great deal. So every option position is different. Just think of them as they're all different types of cars. You have to look at it relatively, because just buying the cheapest option, you want to buy the car for $200. It doesn't have an engine. It's all rusted out. It has no tires. It's not going to do you any good. You're wasting $200. And, you can go and buy really, really cheap, way out of the money options and waste your money on those too. It's a very almost exact analogy. So whoever asked that question, I hope you're listening and listen to our answers and just realize that that's the wrong question, and kind of think about why it is and think about some of the things we're saying, and sort of start embarking down the journey of sort of learning the nuances of what's the difference between in the money and at the money and out of the money options. What's the difference between weeklies and monthlies and leaps? What's the difference between spreads and outright options? And start looking at those nuances and be able to position yourself more strategically. Options is chess, not checkers.
Dave, anything you want to add on this to pile on what I and Mr. P have already said here?
I think the cheapest way to buy options is you go down to your Marine Corps recruiting station. You sign up for the U.S. Marine Corps or another fine branch of the service, and then when you get out of boot camp, you open an account at TradeStation with our Salutes program, because you'll never pay commissions.
There you go. A man who's on message throughout the show. I like that.
But aside from that, what I would say is I try to identify really what I would consider things, essentially in ranges. For me, I'm a directional trader. So for me, I look at the underlier and I basically say, do I think right now it's at a spot where it's likely to turn in a certain direction? I don't have a certain rule, but what I do is I say, because very often, the market makers are going to price in a certain amount of movement in either direction. Well, if I'm good at my technical analysis, which I try to be, and I'm at a support level, then I would think that the puts, for example, are probably too expensive, and the calls are probably too cheap. So I try to combine an understanding of the stock with the options. And by doing that, that's what I would say. And it might seem a little bit, it's not directly honing in on the options in terms of implied volatility or some of the different Greeks. But if you look at it, and remember, these are derivatives of underlying instruments themselves, and those things can be cheap or expensive within their own universe. If it's, if the stock is the top or bottom of its range based on what it's doing, I think it's a good idea to look beyond just the option itself and try to have an understanding of where the underlier is and what it's doing.
All right, we've got a bunch more here. Let's go to Tim. Tim T says, you guys slammed buying straddles on your last show. Are they really that dangerous, or is it more of a question of people not knowing what they are getting into. This actually, I think, refers to a show we did a few months ago. We were talking about, I think some of the, the biggest mistakes you could make as a trader or new options trader, or some of the maybe misperception. I think it was misperceptions people had about options trading. One of those ones that these, straddles are this great way to trade markets no matter which way they go, and that you don't need to have any outlook on the underlying. You just that's been the pitch for a long time for straddles. Make money in any market condition using options, using straddles. And technically that is the truth, but I think as we outlined on that show, it's not so much that you should avoid them, it's just that you should be cognizant, you should be aware of the risks involved. They're not quite as easy as some people make them out to be. A lot of the challenge of especially being long straddles is you have to really defend that position by aggressively scalping gamma, which is a challenge to do in retail accounts from a margin perspective and from a capital efficiency perspective. So it's not really a viable path for a lot of retail to take. So therefore, they're kind of left just buying the straddle and hoping it moves in their direction, which is not a long-term path to profitability. So that's what we're really saying. In order to really trade long straddles, particularly very effectively, then you need to really be savvy, be pretty aggressive with your gamma scalps in order to make that. Think about it, you're paying back your decay. You have two options decaying on every strike for you. So your at the money strike is decaying twice as rapidly. So you have to watch out on these straddles in terms of what exactly you're doing and understand what you're doing so that you can be aware. That's all we were saying. Be aware of the risks. We weren't saying you never should trade straddles. They have their use cases, obviously. And certainly as an analytical tool, they're great. Being able to see what the market is pricing in for things like earnings and stuff is always fantastic. But just know what you're getting into ahead of time. Anything on this, Mr. Dave? You a fan of straddles?
No, I'm not. I don't like long straddles. I think there are times, obviously, when they can work in a huge way. But I'd say, first of all, for retail investors, you're up against a lot of very smart people and models that know how to price these things. So right off the bat, I don't think you're on a level playing field. And the second thing about them is that, it's a position where that half of it's going to expire worthless. So to me, that in and of itself is, I don't like overall, to me, that's just not something that I'm comfortable, doing on a consistent basis.
Dan, you were on that show with us. Any updated additional thoughts on the dangers of straddles?
Yeah, I mean, Dave touched on it by saying, you're up against, all these people with all these models and such. I mean, straddles are great under the exact right circumstances for the exact right people, But, I mean, a lot of times people who trade straddles, they see a P&L diagram and say, well, if it moves a lot, I make money. And, you ask them, well, what about the implied volatility? They say, well, what's that? You are not going to make money trading a straddle unless you're very, very, very well versed in volatility and great at reading volatility charts and, and realizing that it's a gamma vega trade. It's not a break-even chart trade.
Yeah, we talked about that before many times on the show as well. The dangers of break-even analysis. You like this one, I think, Dan, so I think we'll end on this one. This is the comment from Alan Van. He wants talking about his favorite Greek. He says, my options trading is mostly focused around theta. I really don't pay attention to the other Greeks. It's all about collecting that theta. Seems to be working so far. Am I nuts? Well, this guy obviously focusing on some premium harvesting type strategies, I will assume, charitably here. Mr. Dan, as the man who literally wrote the book on the Greeks, what do you have to say here for our friend Alan?
Yeah, well, I mean, nuts is not the right word. I mean, you very well may be nuts, but, I mean, the analogy I always use, I love to use, I probably used 100 times on this show is like, that's like saying, hey, look, the only thing on my dashboard that I look at is, the tachometer. I don't look at the speedometer. I don't look at the gas gauge or the temperature gauge. I only look at one of those things because that's my favorite. That does not work. They're all there for a reason because you need to pay attention to all of them. And especially with the Greeks, I mean, the Greeks actually really integrate, in such a way like the tachometer and speedometer, integrate somewhat, the reason there are these major first order Greeks is because you need to look at them all. And especially if you're looking at theta, implied volatility affects theta, and consequently, vega is related to that whole equation. And then if you're looking at theta, part of that equation too is your delta, because if you're trying to make a certain amount every day on theta, then delta tells you how much it can go against you every day. So, it's not necessarily crazy, but you're doing yourself a disservice, and you're not seeing the broad picture. You're just kind of seeing the thing that excites you and not worrying about risk and not worrying about other ways you can make money.
It's a good analogy. I like that. The different gauges on a car instrument cluster. I like that. I'm going to have to borrow that from time to time, Mr. P. All right, Dave, any last thoughts here on this question from Alan, who says all he does is try to harvest theta?
I'd say it's working now in a low volatility environment, and don't think that this is always the way things work. So I think, I would just caution him over time to watch things like correlations between asset classes, especially the yen, because when things start to pick up, and it's interesting, if you look at, very quickly on cryptocurrencies, these things traded great, and if you look in the last month, they've all tracked each other. Ethereum, they've all moved almost in lockstep hour for hour, and now they're going lower. So when you see correlations pick up, you might want to shy away from that theta approach.
All right, listeners, unfortunately, that music means we've come to the end of another epic journey through the world of Options Bootcamp. But before we go, let me go back around the horn one last time, checking with my cohorts, my partners in crime, see what they have cooking that may interest you. Dave, as our guest, I will start with you. You kind of mentioned it before, but one more time, I want to make sure we don't, no one missed it. Somehow they missed how to find it earlier in the show. Why don't you hit them up over there? How they can find that veterans platform over there at TradeStation? And while you're at it, if they're not a veteran, but they're interested in trading options over there at TradeStation, what do you guys have going for them?
Okay, well, TradeStation is an award-winning platform. It's got all kinds of tools. And, we can go on and on forever about it, but the key thing is this has got some significantly advanced technology for people who want to do analytics. If you're interested in even any kind of software stuff, there's things you can do. Coding in TradeStation used to be a very expensive piece of software to have. Now, basically, it's available to everyone. And then if you're a veteran, it gets even better, because if you're a veteran, if you're an active duty military or a first responder, you're going to get lifetime free trades on options, equities, and ETFs. It's a great opportunity to learn and to really get your feet wet in the start in terms of our TradeStation Salutes program. That's what you want to look for. If you Google TradeStation Salutes, that will bring you to the place for more information.
Check it out, TradeStation Salutes, or if you're not a veteran, come on over to TradeStation.com, kick the tires over there. And he's right, TradeStation has always been known as a pretty advanced platform in terms of all the add-ons and cool things you could do with it. Now, if you're making a lot of that available for free or for low cost, it's certainly worth kicking the tires, particularly if you're like our other listener who likes to just click on bids and click on offers, in which case they got you covered over there, with a little bit more, I think, over there as well. TradeStation.com to learn more. Mr. P, you guys are always working on interesting new classes and new initiatives and new things for your clients over there at MTM. What is cooking in the land of market taker mentoring these days, sir?
Well, we've got something really darn exciting cooking. We are gearing up to reveal our annual in-person options training retreat, which is really darn exciting to me, and I think it is to some of our other students too. We are going to actually unveil that on February 10th, Saturday, February 10th. We're going to be having a webinar all on explaining where our annual options retreat this year is going to be. It's July 27th, 28th, I can tell you that much. And we're going to tell you where it is. We're going to tell you what it is. We're going to tell you about the classes we're having, about our party for our students afterwards, our reception. So, yeah, go on over to markettaker.com/memberships, and if you slide all the way to the right-hand side, it says Annual Options Training Retreat. Just click on there, and you can kind of get on the short list to get a little bit of information all about it.
I'm really looking forward to my first class ticket to it as well, including, I think you have to be booked on the Concorde to get over there, which is, I don't know how you dug up that old plane for me, but I'm very thankful, Dan. I'm looking forward to it.
Of course.
Limo the whole way there and back. I'm looking forward to the first class treatment. Check it out for yourself over there at markettaker.com. And of course, our friends at NASDAQ couldn't join us today, but head on over there at NASDAQ.com. Follow them on Twitter. You know how to find them and all the content they're putting out there, including all of Jill's trade talks and all of that fun. So I'm sure she has some great stuff coming out of, I think she's at an advisor conference this week. So some great stuff coming out of that conference. Check it out over there for yourself. And on behalf of Miss Jill, who couldn't be here, and Mr. Passarelli and Dave, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, sending in so many questions. Keep them coming. And we'll see you next time for more of Options Bootcamp.
Options Bootcamp is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. NASDAQ, tech forward, leading the U.S. options market and continually rewriting tomorrow.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.